Good evening, ladies and gentlemen. Welcome to Market Masters on Business Today Television. I am Shailendra Bhatnagar, joining you on this festive week when we have bright cheer and all the green signs for a wonderful rally from now on in the markets. Our guest today is a very, very special man. It can't be emphasized more of his importance to Indian markets over the last 3 decades. I'd like you to welcome Mr. Navneet Munot. He's the Managing Director and Chief Executive Officer at HDFC Asset Management and a very, very experienced stock picker. An extraordinary talent when it comes to navigating the ups and downs of the equity markets, both on the debt as well as the stock side, and has been associated with a lot of mutual fund AMCs since the very beginning of his career in 1994. Mr. Munot, welcome to Market Masters, and it's both a pleasure and honor hosting you on Business Today Television. A very warm welcome to you, sir, and festive cheer all around.
Thank you, Shailendra, and it's entirely my pleasure as well to be with you on this show and wish you a very happy Diwali and wish all the viewers a very, very happy Diwali. And I wish you all a very healthy, happy, joyful, prosperous, blissful New Year.
Okay, wonderful. With this, I'll just take about 20 seconds to explain the importance of Navneet Munot to what the markets are at the moment. Mr. Munot, as you know, manages $65 billion, which is 5,36,000 crores at HDFC Asset Management, and this is spread over more than 40 equity funds. He's been the MD and CEO of HDFC Asset Management since February of 2021. That's 3 years. Before that, Mr. Munot was the Chief Investment Officer at SBI Mutual Fund, where he spent about 12 years. He's worked as Executive Director at Morgan Stanley for a year or so. And from 1994 to 2007, Mr. Munot spent a considerable time with the financial business of Aditya Birla Group, and it's been a wonderful, wonderful journey. Navneet has overseen 6 bull and bear markets and has consistently made money for all his mutual fund shareholders. I know I'm praising you sky high, Navneet, and the reason behind this is that you are going to lay a roadmap for our investors and our viewers on how to navigate the markets over the next 2 or 3 years. So get ready.
Sure, Shailendra, thank you for that kind introduction. There is a famous book of Malcolm Gladwell called Outliers.
Yes.
And it the stories of a lot of successful people, and his conclusion is that they just happen to be born in a particular period and in a particular place.
Yes.
And I think in India, I always say that in financial services, some of us who came in early 90s, and I think the rest is history. Over the last 30 years, the way India has grown. But I think if you ask me for next 25 years, when we are in this Amrit Kal, this is the second year of India's Amrit Kal, and in 2047, when we will be celebrating 100 years of our independence and we will be a developed country and maybe one of the most respected developed country in the world, if not the most respected country in the world as a society, we regain our past glory. I think the next 25 years, each and every one of us who are in this country at this point in time are so lucky.
Absolutely. With this broad view on the market, that the next 25 to 20 years are going to be fantastic. Let's get to the nitty-gritty of how stock markets are operating these days, Navneet. My first question to you is, look at the global landscape. We've seen interest rates in the US climb to 5.25%. The 10-year bond yield is off the charts, and we have this geopolitical crisis in the Middle East following the one in Europe. How do you see Indian markets navigating all this over the next 2 or 3 years? Elevated interest rates, elevated inflation, and coupled with an undying enthusiasm for Indian equities.
You're absolutely right. When we look at the world is geopolitically realigning. I think the kind of geopolitical challenges that the world is witnessing has not been in last 30 or 40 years since the end of the Cold War in 1980. We haven't seen a geopolitical situation as worrisome as it is today, whether it's Russia, Ukraine, whether it's the evolving situation in Middle East, whether it's Armenia, Azerbaijan, whether the concerns around China's policies, I can go on. I mean, if you look at the economic situation globally, you rightly mentioned that inflation has been at a multi-year, if not a multi-decade high in many parts of the developed world, and central banks had to increase interest rates at a rapid pace over the last several quarters. And the developed world hasn't seen these kind of interest rates for a very, very long time. There are lack of growth drivers because in large part of the world, demographics has been against them. Now, when you look at that, and I can go on talking about the world, India is indeed an oasis of hope. India is one of the biggest ray of hope for almost everybody in the world. This is a country which has got democracy, we have got demographics, we have demand, we have digitalization. And the fifth D I can add is the determination of 1.4 billion people to do well and ensure that the next 25 years belong to us has never been seen. And I think we are one of the biggest hope for the global economy, for the global society. Our leadership of G20, the pace at which we are creating infrastructure, the physical infrastructure, social infrastructure, digital infrastructure, the pace at which we are making progress in several other fields. I mean, space technology, the Chandrayaan is just one of the examples, but many others is absolutely unparalleled. And I remain very optimistic about India's future in a world which is very fragile and very volatile.
Wonderful. So this is an island of safety that we are fortunate to live in over the next 20, 25 years. But let's drill it down, Navneet. I just want to understand how, as the CEO of the third or the fourth largest AMC, you are looking at the Indian markets at the moment. Let's look at zones which have done phenomenally well over the last 2 odd years, and one of them has been the capex cycle, the other being this revelation on the PSU front, where volume and value has both exploded. How do you see both these sectors?
No, of course. So I mean, if you look at India's economy, broadly, we have two-thirds coming from consumption and one-third from investments. I'm not giving the exact number, but like by and large, two-thirds of our economy is consumption, one-third is around investments. Within investments, we have households. Bulk of their investments go in real estate, which also helps in the overall capex. The government, which spends money on the infrastructure, and then you have the private sector capex, where companies, businesses are investing for creating capacity. Within that, the government has been a very, very big driver of capex over the last several years. From the central government, percentage allocation to capital expenditure as a percentage of GDP or as a percentage of overall budget has gone up very, very substantially, and that has really helped in revival of investments. The private capex over a period of time is likely to follow suit. The corporate balance sheets are in a good shape. Corporates have deleveraged over the last several years. Banking sector balance sheets are in a good shape and they are in a position to lend. So when the capex happens, when you have a capacity to borrow money, capacity to raise money, and then you need a higher capacity for your business. And I think over the next several years, I think that India is entering into another investment, into a big cycle of investments. And
Absolutely.
many of the policies, whether it was related to reduction in the corporate tax rate, whether it was PLI incentives, whether the opportunity that we are trying to take advantage of from China plus one global opportunity and various other measures to promote the manufacturing sector are likely to help.
Okay. Navneet ji, all this and a lot more that you mentioned is already baked into the prices, whether we looked at the sectoral outperformance that we are seeing in the auto space. Pharma is now ticking up pretty well. We've seen a very, very sharp burst coming in the form of defense counters. All this, the daily price change is fairly visible in all that you mentioned. When you chair the early morning meeting of fund managers, and you are yourself an MCOM and a CFA, how do you sort of navigate this market where whatever you want to buy has become very expensive, and whatever is not expensive is not worth buying?
So I don't attend the morning meeting of fund managers, and unless they have a complete independence in the way they manage the money. But whenever I ask their views, which can be shared with our investors, they tell us that I think they feel optimistic about the longer term. You are right. Some of these stocks have run up quite a bit in anticipation of the cycle that we talked about a few minutes back. But I think one has to look at a longer term prospects in these things. I think the investments as a percentage of GDP is yet to reach the previous high. And for all the factors that we discussed before, over a period of time, we are going to see a much larger investments in India. We are starting from a very, very low base, and we have a long way to go. You are absolutely right. Some of the stocks have run up, whether it's capital goods, engineering, construction. You mentioned about some of the companies in public sector, though they have moved up from a very low base, but they haven't gone up as much as maybe in some of those stocks. The value may still be there. But you are right, some of these stocks have run up in anticipation of good performance over the next several years. But
Which
it
food
depends on
stocks?
the horizon that one has in mind. Are you looking at next 6 months or 1 year? Maybe the earnings growth or maybe the prospects have got fully baked into the price. But if you are really a long-term investor, then there is opportunity for continuing growth.
And which brings us to my next question, Navneet. Of course, fund managers such as you have often advised to look at a 5 to 7 year investment horizon to make supernormal returns on equities. At the moment, when you look at the economic landscape in India, as also the corporate landscape, where do you see, maybe small bubbles getting formed? Where do you see value to be had when you look at the broader corporate map of India?
So markets move like a pendulum, right? Equity is not like a fixed income where you get a quarterly or an annual coupon rate. The market has delivered a certain set of returns over the last 30 years. We talked about me coming in as a professional in the financial markets in 1994. We have seen the journey from around 3,000 Sensex to where we are today, a little over 60,000 Sensex. But in between, we have seen several cycles. You talked about having seen multiple cycles. Markets move like a pendulum. There would always be pockets of market which will see certain overvaluation. There'll be pockets of market there would value be. I think if we look at currently, over the last couple of months, we have seen significant run up in the mid and small caps, particularly the micro caps. In fact, I'm told, though we don't watch that, we don't participate in that, but some of the SME stocks, I'm told, have really rallied very hard. Maybe there is some bit of froth in some of those names. If you look at the overall large caps, by large caps, I mean, as per SEBI definition, the top 100 companies. Top 100 companies today, whether you look at the Nifty or a BSE 100 index, the valuations are by and large in line with the long run average. There are a couple of sectors like banking and financials. I think IT, if I look at oil and gas, there are a couple of sectors in the large cap space who haven't participated in the rally the way it has happened in the mid and small cap space, and maybe there is pocket of value there.
Okay. Navneet ji also wears another hat, which is as the chairman of the Association of Mutual Funds of India. Mr. Munot is also responsible for the broader health of the mutual fund sector. Let's pay a bit of attention here, and I'll share an anecdotal evidence with our viewers. One particular AMC on one fine evening got 1,000 crore rupees to invest in their small cap fund, and you'll slowly see a smile coming on Navneet ji's face, because that AMC is very close to his heart. But the kind of demand that is coming in from the small cap and the mid cap universe of funds, Navneet ji, is completely astounding. Does this point to a fact that we just might see an intermediate top happening in small caps and mid caps?
So I think you have to look at a broader picture. Before that, I mean, last few months, mid and small caps have run up quite a bit, particularly since March. But before that, you had several quarters where these stocks are not doing well. I think we have to look at more like a 3-year, 5-year, 10-year journey. Also, you need to keep another thing in mind that when we talk about the mid and small caps, the universe is very large. The large caps are the top 100 companies, the mid caps are the next 150 companies, but everything else is a small cap. I think at last count, there are 16 or 1700 companies which are below a market cap level of 17,000 crores or so. So that would be roughly what, $2 billion or so. And below that would count as a small cap. At any point in time, as a portfolio managers, there would be opportunities to deploy money in some of them by taking a longer term view. And I think it's important that investors who are putting money in any of these market cap or any of the fund don't go by the rear view mirror. Don't look at what has happened in last 6 or 9 months, but look at a more longer term picture. I still believe, I mean, if you are a long-term investor, and by long-term, I don't even mean Shailendra, आपने जो बोला 5 or 7 years, I would say 10 or 20 years. I mean, India is such a young country. Even all of us who are in 50s, we are going to live for several decades now. And given the longevity of life, given the larger income, given the lifestyle inflation over and above the normal inflation, the way cost of living is going up and our lifestyle is changing, we would need a lot more money going forward for our good retirement. So I think one needs to take a much longer term view for investing than looking at what has happened in the last 6 months and what can happen in next 6 months.
Right. Navneet ji, I absolutely agree with your thought process as also the investing cycle. But you know, it is my job to ask such questions because
They are very pertinent, actually. Sorry
yes,
to interject. And you are absolutely right. Some
yes,
of these biases, this is called a recency bias, where we think that what has happened in last 3 or 6 months or 1 year, we extrapolate that. That if mid
yes,
and small cap funds have delivered 25 or 30%, they will continue to deliver like that. It won't happen. I mean, a
yes,
fund cannot deliver 25% every 6 months. The trees don't grow to sky. There's like a bandwagon bias where, like, if everybody else is saying there is value there, that's why I believe that there is value there. But that's not the right thing to do. And a confirmation bias where because I've bought a stock, it's done well, I only want to hear positive things about us. These are precisely the cognitive biases, the behavioral biases are that we need to work against to be a successful investor in the long run. It's very, very critical. So you are asking very pertinent questions, and it's very important to have a discussion, deliberation, debate around it.
and one way to avoid these pitfalls is, as Navneet would explain better, is go into the SIP mode. And if you are keen on small caps and mid caps to be a part of your portfolio via the mutual fund route, invest regularly, invest each month, and wait for a larger investment cycle to pan out, as Navneet ji very recently pointed out that the returns have been fantastic. In fact, there are a lot of small and mid cap funds from HDFC, AMC stable that have given a compounded return of about 23-24% over the last 20 years, 25 years. And that kind of money you can only make in a country like India. Coming to SIPs, Navneet ji, it's been a fabulous, fabulous change of habit that has happened. We are moving towards financialization of assets in India. 16,000 crore rupees come to asset managers such as you each month. Isn't this a wonderful thing to be in? And probably this number is headed higher over the next 2 or 3 months, 2 or 3 years.
No, I think it will keep increasing. So I think it took us around 25 years for our industry to reach to a number of 7 or 8 thousand crores. And then the next 7 and 8 has happened in like 4 or 5 years. And I think we have hit the tipping point. From here on, the growth can accelerate. The awareness is increasing, and I think there are 3 or 4 factors that has led to this rise and why I feel very optimistic about continuing rise in the SIP flows. The number one, track record. You just mentioned about several of our funds which have been in existence for 2025. In fact, next year, SDFC Balance Advantage Fund would complete 30 years. Top 100 has been around for 27 years. FlexiCap has been around for 28 years. So investors have seen returns over such a long period of time. They've got the faith. The transparency. I think you get such a transparent product in the mutual fund, which is absolutely unparalleled relative to all the other products in financial services. You get technology, which has made investing easier and easier. And I think for our distributors, for our investors, I think the digitalization has really helped. And last but not the least, just to create the acronym of fourth T, but it's, I can say training, but it's more about the investor education. The role that people like you have played, the role that AMFI has played in creating the awareness about mutual funds Sahi Hai, all the advisors, distributors under the guidance of SEBI, I think all of us have done a lot of hard work over the last several years to create awareness about power of compounding, long-term investing. Don't get swayed by the volatility. Take advantage of the volatility by continuously averaging your investment, remaining disciplined. And I think we are seeing the results as an industry, and we feel very positive about it.
Absolutely. 16,000 crores, ladies and gentlemen, is the monthly SIP into the Indian mutual fund sector. And at least I am very sure that this number is headed to 25,000 crore rupees per month over the next 3 or 4 years. Navneet, that brings to a bigger problem in the market, which means that all quality stocks in the top 50 universe of strong outperformers will now get more and more expensive, because this is the kind of money that you have to deploy each month. This is also a crisis of plenty, but the fact that the Indian markets are going to get expensive continuously, is that a cause for worry, because you need to find out new investment ideas on a fairly regular basis?
No, I don't think so. So the 16,000 crore amount looks big because we were at, let's say, 7 or 8,000 crores, or maybe 10,000 crores few years back. But you have to see in the context of the size of the overall market and the pace at which it is growing. The total market cap of India, if it is likely to touch, let's say, 3.7 or $4 trillion, within that, what is the total size of the equity assets of the industry? It's 24 lakh crores, right? It's less than $300 billion. That also includes some of the hybrid funds where part of the money goes into fixed income. The actual equity investments is still very small relative to the total size of the market. So we are, I think the ownership of equities among all the mutual funds put together is in single digit. I think it's less than 10%. So we have a long way to go. I think if we look at the size of the largest company in India versus the size of all the mutual funds put together, versus if you see some of the developed markets like US, where an asset manager would be managing the amount of money which would be multiples of the largest company in that market. So we have a long way to go. Foreigners at the peak owned almost 25% of our market. That has come below 20% now. We are starting from a very low base. And I think this is a good problem to have, isn't it, Shailendra? Over a period of time, as domestic investors participate in India's growth story
Absolutely.
by buying good quality companies and hold them for long term, that's a very, very good problem to have.
Absolutely. I said that it's a crisis of plenty. And the good
It's
point is
actually not
that
a crisis as of now. I don't see that challenge in the foreseeable future where our money would be so much that we will find it difficult to deploy.
right.
And
Let's
also the supply, right? I mean, the government still owns a lot of percentage of equity in several of the public sector companies which can be
yes.
divested. There's still a lot of ownership by the promoters or the families that can be divested. Large amount of money that has been invested by the venture capital and private equity firms. They are looking at exit over a period of time. We have seen some of them in last few months. I think there'll be many more over the next several years. And of course,
Absolutely.
the businesses that will develop.
So you can, viewers, see the palpable excitement that Navneet ji exhibits when you talk about stock picking and the longer term benefits of buying equities over a sustained period of time. Returns have shown over the last 25, 26 years that equities have outperformed, and given the kind of economic growth that is there in the pipeline in India, this is most likely to get itself repeated again and again. Navneet ji, because a lot of newer and younger investors are coming to the market each month, they require a lot of hand holding in terms of how money should be invested and what should be the most critical aspect of investment, which is asset allocation. How do you read the market from now on, and in terms of allocating money over large caps, mid caps and small caps, what would be your percentage?
So one of the heartening feature of our flows is that there are a lot of young investors are entering capital markets. Some of them are entering through direct investing. Some of them are entering through the SIP route. My recommendation would be to enter through the SIP route and remain very, very disciplined on that. This is a generation which is very tech savvy. This is a generation which is knowledge hungry. This is a generation which wants to know a lot more about everything, whatever they are buying, including their investment, which is very, very positive. My suggestion would be, I think, go through the SIP route. Age is on your side. If you are in your 20s or early 30s, you have another 60, 70 years to accumulate your wealth. The Warren Buffett is a classic example. He started at the age of 11, and 99% of his wealth has been made after he turned 50, and it's compounded such beautifully over a long period of time. And if India is where, let's say, US was 50 years back, I think there is tremendous opportunity for all the youngsters who are on this call.
Okay. And just a little aside, when Mr. Buffett was 50, 51 years old, he was worth about $1 billion. And at the moment,
They started at the age of 11, and he said that I was 11 years late. I wish I
yes,
could start at 11 years before. So he turned
absolutely.
millionaire, I think, somewhere in 30s, a billionaire in I think, early 50s, and
Yes.
of course, 100 billion over the next couple of decades. That's the power of compounding, right? I mean,
Absolutely, and given his health, his the status of his excellent mental health, I'm sure he's going to get into his second century as well, which is about 110 years from now. And at that point of time, I'm sure he'll be a trillionaire multi times over. Navneet ji, let's look at two segments that have come up very sharply over the last 3-4 years. One is this massive trend of digitization across the economy, whether it's led by UPI, whether it's led by the Jan Dhan accounts and the JAM Trinity that we've seen working admirably well over the last 2 or 3 years. Are there any sectoral winners that you see emerging out of this fabulous backend that the economy has now?
so you're right. I think the digitalization of the economy, formalization of the economy, financialization, and within that, financialization of savings, all of these are kind of interlinked. And over the next several years, I think this is one area where India has clearly been kind of like leapfrogged and will continue to advance at an accelerated pace. In a very short period of time, as a nation, as a society, we have transformed from a most data poor society to the most data rich society in last 8 or 9 years. You have a population which is digitally enabled, which is tech savvy, but underserved on many products, particularly the financial services. So I would say our industry is one of the biggest beneficiary of that, because we have under penetration of finance and digitally aware society or digitally enabled society, and you can serve millions of investors, which wouldn't have been possible fully in a pure physical world. So I think there are many other businesses which are benefiting from the digital revolution in India, and the whole world is watching India with a bated breath in terms of the advances that we are seeing here. In fact, I tell you, interesting that in last couple of months or quarters, for every global investor, the most important thing they are looking for in companies, and I'm talking about global companies and not Indian companies, what's your AI strategy? What's your India strategy? And what's your sustainability strategy? And I would say all three are interlinked. And that's why, I mean, India is a place which is likely to exhibit very interesting advances and very interesting trends in what can happen in digitalization. And there is no sector which will remain insulated from that or which will not get impacted by that. We are in a world where either you disrupt others or you get disrupted. So everybody should be willing to shape up, otherwise you'll have to shape out.
Absolutely, and you can actually make out, the bullish pulse that Navneet has on the digitization space. And truly, we all are the beneficiaries of this wonderful phase that has happened over the last 2 or 3 years in automating our lives, making it easy, both on the investing side as also on many of the drudgeries that we faced in terms of banking, in terms of electricity bill payments and all of that has been taken out from our lives. So we are heading into, the markets are heading into this treacherous zone where you have 5 state elections and the big one in May 2024. How is HDFC AMC looking at the political landscape of India, and are there any pitfalls that you see?
So I think we will give it to the wisdom of 1.4 billion people. I'm sure we will choose our destiny well. We have faith on India. We have faith on Indian entrepreneurs. We have faith on Indian markets. And I think at our end, we remain, I think, fully focused on bottom-up stock picking. We remain fully focused on our fundamental research. It's very difficult to take calls on politics and then create a portfolio. There are 3 sources of generating returns as alpha in an equity fund. You do market timing, you do sector allocation, and you do stock selection. At our end, our biggest focus has always been on stock selection. You talked about the track record over the last 20, 25, 30 years. The biggest contributor to that would have been focusing on the stock selection, and we remain fully focused on that. And as I said earlier, I think I have full faith on the wisdom of 1.4 billion people for choosing the right destiny for ourselves. India is in Amrit Kal, and we need to have that deep, unwavering faith on the growth potential of India.
Okay. And as you speak about
But
these
markets
wonderful...
happen, Shailendra, I must mention this. At
Yes,
no point
please.
in time, don't get me wrong, when I say a 25-year Amrit Kal doesn't mean that markets won't. I mean, markets, they by nature, this beast is about going up and going down, right? I mean, the
Yes.
point to point 25 years, it will be substantially higher, but in between, there would be volatility. And the person who can stomach that volatility, don't get swayed by it,
Yes.
remain invested, and remain disciplined are the ones who will make the most of it.
Absolutely. We are in probably once in a lifetime, once in a century event that is panning out on Indian financial markets. And the best way to ride that would be with patience, to buy quality, remain stick to quality, and to buy any further dips that come into the markets. They give you an opportunity to ride this fantastic 20-25-year trend that Navneet ji points out. My last question to you, sir, is what keeps you awake at night in this kind of a bullish environment?
What keeps me? So, I mean, we represent HDFC, and the name is, synonymous with trust and confidence at every point in time. When I get up in morning, and so all of us, we are driven by a deep sense of purpose. The mission that we have set for ourselves is to be the wealth creator for every Indian. To be the wealth creator for every Indian. All said and done, Shailendra, we talked about 16,000 crores of SIP flows. The way flows have increased into the mutual fund industry, but there are, I think, large number of households who haven't taken benefit of this. At our end, I think our goal is to get as many investors as possible into the mutual fund industry so that they can participate in India's growth. Markets, as I said, there'll be many things that are happening in the world which are quite worrisome, whether it's a geopolitics, global economic situation. You talked about the inflation and interest rates at the beginning, but I think we have a faith that in all of this, India is an oasis of hope, and we have to ensure that not only our current set of investors who benefit from it, but we get many more investors to participate in that growth story.
Wonderful. And thank you, Navneet ji, for this lovely 45-minute interaction. I could have gone on with my unending list of questions, and you could have gone on with your wonderful replies, but time is finite and it draws to a close on Market Masters. Thank you so much for this wonderful interaction, and I'm sure a lot of our young viewers will take a lot of benefit from what 30 years of experience and wisdom speaks to you from the chair of MD and CEO of HDFC AMC, Navneet Munot. Thank you so much.
Thank you.
So that's it, ladies and gentlemen. What a fine 40 minutes it has been trying to understand how to navigate markets from now on. Navneet's view is that over the next 25 years, given the kind of capex, given the kind of digitization, the determination, the aspiration, and the oasis of safety that India is at the moment, given the dips in the market, you will see a very nice secular uptrend. The best way to deal with that is invest regularly, do a monthly SIP into a quality equity fund, and don't stop it over the next 25 years. Thank you so much for your time, and I hope you enjoyed this conversation as much as I did.